Shares of Exxon have nearly doubled since activist hedge fund Engine Number One successfully sent 3 of its nominees to the oil giant's board. The San Francisco-based fund was just 6 months old at the time, launching a campaign to turn Exxon away from fossil fuels and shifting its focus to more ESG. So more than 2 years on, has its involvement made a noticeable difference beyond the share price? Let's ask our next guest. Joining us from Josh Brown's Future Proof Conference are Jennifer Grancio, Engine Number One CEO, with our very own Bob Bassani. Welcome to both of you. Bob?
Kelly, good to see you as always. Beautiful Huntington Beach, California. Jennifer Grancio is the CEO of Engine Number One. Thanks for joining us. You know, a couple months ago, a little bit of news here. Engine Number One announced you were selling your ETF business. You're going to be going with it to TCW, the big asset manager. What was behind that move? What was the decision there?
Yeah, so if you think about Engine Number One and everything we set out to do, we have an alts business and an ETF business. And from a proof of concept perspective, the active funds like NetZ and SUP have done very well. And so there's an opportunity to be acquired and scale the business, which is terrific. You need scale to grow an ETF business, and TCW is looking to really underwrite their active equity and their ETF business.
And when is that deal going to close?
Hopefully very soon.
You're going to go with them?
I am.
So you're going to be managing the ETF business, the whole thing that you became famous for. And you became famous for taking on Exxon, getting board seats out there, making a difference to them. But what everyone's noticed is since then, there's been no big new campaigns, no big proxy fights from you, no picking on some other people at this point. What's changed? Is there some change in strategy going on?
Yeah, I mean, I would say our strategy, has been very consistent since the beginning. And so Exxon was an opportunity to release value. Somebody had to be an activist. And so we had to go in to drive change and put new people on the board. A lot of the work that we've done since then, hostile activists just wasn't the right tool to pull out of the toolbox. We've done very constructive work. Coke and Republic Services, for example, just a little while ago, announced a relationship where Republic is a waste company. They're doing more high-quality recycled content. Coke needs recycled content, and we match make, and we've driven value in both companies.
So you're not abandoning the sort of quasi-activist stance, but the hostile proxy thing is not the way you want to go anymore. Is that the point?
Many times being very active investors, but not being hostile is the right way to go.
So we have a couple of your ETFs that are out there you're still managing. The Transform Climate ETF. These are companies benefiting from the energy transition to net zero carbon emissions. You've got the Transform Supply Chain ETF. For companies for supply chain transformation. Explain how this all comes together as part of a package to try to help change the world.
Yeah, thank you. I mean, if you think of the average portfolio today, the average portfolio in the core is so heavy megatech. And so really what these products do, both SUP on Transform Supply Chain and NetZ on the energy transition and Transform Climate, is they let you take some out of your core and invest it in these trends. And these are enormous trends. If you think about energy transition, we're investing $5 trillion a year. And there's a complicated interconnected system of big public companies. And the ones that win are going to create huge value. It's what NetZ does. Supply chain, unfortunately, the world's deglobalizing. We put everything far away, and then supply chain's totally broke. And so, again, we're seeing a huge trend of manufacturers moving back to the U.S., and there's a lot of value that can be created for investors.
Now, Engine Number One has a private capital fund, too. In July, you announced you were going to put $780 million into Vale. That's a Brazilian base metal maker, through its private capital arm. You have a 3% stake right now. What's the objective of this investment? This is a lot different. Now you're directly investing in you own 3% of a very large company right now.
Yeah, if you think about what Engine Number One does on the ETF business, we've been able to focus on public companies and realizing value in public companies as we go through the energy transformation and these huge changes. But if you think about the energy transformation, we are very short some of the materials. So we're going to electrify everything. We need a lot more minerals and the materials that go into electrification. So on the private and alt side of our business, the Vale investment is a big one that helps unlock that bottleneck.
What I like about you is you're not worried about tech. Industrial companies are out there. They're leading the way in the decarbonization business, reindustrialization of America, and that's kind of what you're emphasizing, right?
Absolutely. People need those industrials, and they need to play these big trends in their portfolios.
Jennifer Grancio, CEO of Engine Number One. We'll look to you for more ETFs. She's not going away. I want to note, Kelly, she's going in the ETF business at TCW, now a different kind of company.